Okay, so in this video what I'm going to do is take you through the Market Cycle Guidebook, and the purpose of this report is to basically, on a monthly basis, look through some of the slower moving, medium to longer term factors such as valuation, cycle, monetary conditions. And so what I'll do here is just take you through the main parts of the report and show you also how it fits in with the rest of the service, and also in terms of the broader actual research process and framework. So here we go. We'll start with the top-down forward there, which is basically setting the scene, a bit of a snapshot of what's going on at the moment, what's been going on, and also a bit of a hint in terms of allocation positionings and conclusions. And so on the front page here, we've got these three sort of panels, and the purpose of these is to really just give an instant snapshot of where things are sitting, so that you can just pick this publication up and completely get up to speed. And so on the first panel there, it's the cycle indicators. So got to look at hard data, soft data, inflation data, and then a snapshot table there of the latest and the trend. Probably no surprise there. And then similar for monetary policy, we've got hikes and cuts across 37 different central banks, and then specific policy stance and outlook across the various central banks there, and again probably no surprises. And then a valuation snapshot, we've got the absolute and relative values, so equity risk premium for S&P 500 there, just to give a sort of a view of the valuation sort of cycle playing out across equities. And then on the right of that, we've got a sort of a high level view across the different asset classes there. So, you know, US equities, developed ex-US, EM, REITs, commodities, treasuries, gold. And you can see the valuations versus history, versus bonds, and versus peers. That should all make quite a bit of sense, and probably no surprises there if you've been paying attention. Okay, so moving on to the month in review. And so basically this section just looks across the previous month, what was the highlights across the different asset classes there, so the market highlights, and then the bit of economic geopolitical commentary there. Just a reminder really what happened. Kind of the purpose of that is just for clients like the investment consultants, financial advisors, and fund managers that have to write their own reports, and they can kind of just pick up from this. Makes it try and make life a little bit easier for them. While we're on the topic, actually, the monthly chart book here comes out on the 1st of the month. So this April commentary came out on the 1st of May, as soon as the price data was available. And then we move into more of the forward-looking stuff. And so this is like the view from the top there, so global economic outlook, the risk backdrop there, and then a summary view across the different asset classes there, and you can see the major asset classes. The short-term view, so that's sort of like anything from 3 to 6 months through to sort of 6 to 12 months, and then the medium to longer term view is more of a 1 to 3 year view. So basically just giving you a high level view of the key drivers there, and the what the charts are telling me in total. And so it's kind of like a cheat sheet for knowing what the outlook is for each of the asset classes there. And then this next part there just translates that into a sort of positioning guide. This little weird green and yellow and orange panel here is basically ratings across the different asset classes. So you can see there across the top, V stands for valuation, C cycle, M monetary policy, monetary conditions, S sentiment, and T technicals, and then just an overall view there. So you can see there for developed market equities, for example, valuation's cheap, cycle's not so great, monetary's obviously positive, sentiment's positive, technicals at the time were a little bit more mixed. And yeah, basically the major asset classes there, and then drilling down to some of the details in that section there. And then from here it just goes straight into the charts, and I cover the charts in a few different sort of segments basically. So the first ones here you can see are monetary policy related, and then I go into cycle, so things like PMIs, business confidence, but other aspects of cycle, so earnings, profit margins, all that sort of good stuff. And then into valuations, so valuations across countries, regions, different types of valuation indicators, and then things like real estate and property, global listed infrastructure, some of the other alternative asset classes, commodities, EMFX, US dollar, and then into fixed income. So I'm not going to go through all of these right now, but I'll just jump down to the appendix here. So one thing that I have added here is the Australia-New Zealand appendix, and one reason for that is that I have quite a few clients over this corner of the world, and being based over here, I probably have some level of insight into what's going on. And so, it's obviously useful for people that are based in this region, but also, ones that are more globally focused but want to have some perspective of what's the high level key developments over here. And again, it's the same sort of format. Economic view, policy outlook, views across the asset classes there, and positioning guide. And then of course some charts that are specific to the region. And then the final appendix there is the capital market assumptions. So these basically inputs for asset allocation, portfolio construction. And you can see they've got the scatter plot there, so expected returns against expected volatility, and then the table with the details there, and then of course some of the assumptions that go into that. One thing to note is I am currently working on actually expanding this section, so I'm going to add another 2 pages of charts which basically give a little bit more insight into these in terms of the inputs and a bit of historical context, so certainly something to look out for there. So, and then just finally to finish up, I'll jump down to the process and framework. And so this is really just to kind of round it out at the end and tell you basically how this report fits into my overall framework. So as I mentioned, it's more focused on valuation and cycle being both monetary policy and economic indicators. And as I'm not sure if I mentioned, but on terms of the tactical indicators, so sentiment and technicals, that's more covered off in the Global Cross Asset Market Monitor, which comes out on a Monday. And then the other reports that I have is the weekly macro, which is more of a holistic view, sort of presents complete end-to-end rounded out ideas. And then of course there's also the quarterly slide deck, which basically pulls out all the key themes from everything that I'm doing. So anyway, look, the research process is basically to start or be grounded in valuation, and but that does change through the cycle, and also you can't look at valuations in a vacuum, because otherwise you'll be buying possibly when it's too early, or selling when it's possibly too early as well, or also helps avoiding value traps if you bring in some of these other factors. So I mean, valuation too, just the final note there, it takes on a different weight at different parts of the cycle. So earlier on in the cycle when valuations are extremely cheap, it takes a much greater weight, and then towards the end of the cycle when valuations are much more extended, takes on also a greater weight. And then through the middle it's more of a neutral, need to look more at cycle factors, need to look more at monetary policy, and then tactical indicators help round out the sort of core view that has been developed as part of that first process. And I guess quickly too, just going over the key beliefs, my view, risk really comes down to owning an asset which is overvalued, overowned, overbought and out of time. And so really that's just talking through that framework there. So overvalued, obviously the valuation factor; overowned, that's the tactical part, so sentiment, positioning; overbought, again, that's part of the tactical indicators in terms of technical analysis; and out of time would be coming down to the cycle there. So some of the data would be rolling over from very strong levels, and monetary policy is probably on the tightening path. But risk is also being underexposed to assets which are the opposite of that: undervalued, underloved, oversold and turning around. I attempt to see things as they are, so ideally avoid forecasting if at all possible, be very much data driven, yet also unapologetically forward looking. So it's very much chart focused, very quant in its elements, but put together with a bit of judgment overlay. And then also things like this must define and frame the key risks and drivers for each given asset class. So I've found that you can basically use this same framework across every single asset class. It's just about, building out the different indicators. There's going to be subtle differences across the different asset classes. You know, valuation's more easy to put together for equities versus commodities, for instance, but you can definitely still value commodities. And then knowing what indicators, charts to watch and monitor, and strive for constant innovation and improvement, and above all, aim to put the odds in favour of my clients. So that's the monthly chart book, the monthly market cycle guidebook in a nutshell. If you've got any comments or questions, just let me know in the comment section below, or you can contact me on the website, and we can even get you set up with a trial of this.